are like paying back money. We're not like reinvesting, or like we're not
It
spending on the
depends on
economy.
the size. It depends on the size, but yeah. So right now you can see that like a budget deficit means that money is flowing to the private sector. Okay.
Okay.
If
I
the
see
balance
what
if the
the
budget
risk.
is balanced,
Yes,
there's no increase in liquidity.
right. So what you're saying is we printed trillions of dollars, and all of these flow to the richer, part of the
Cohort.
population, right?
Hmm.
And if any kind of event or from the policy side or whatever impact these um, wealth accumulating the financial assets, then when that take a leap and then dive down, it's gonna wipe out the effect of the helicopter money.
Let's put it in reverse. So
Okay.
the thing is, if so, it's like, okay, what could cause a major contraction, a major recession or potential crisis? What there would
Right.
need to be like a big, there's got to be some event that drives that or some catalyst. What would be the kinds of catalysts that given where we are? So one of the things that we know about where we are is we're in an economy that is, it's chugging along, fine.
Hmm.
Our star is not 4%. Our star is probably, 2.5%. It's probably around where it has been.
Hmm.
But what happened was the government had made this massive fiscal injection, a liquidity injection in the economy.
Hmm.
So what happened was you got massive inflation in financial assets because of that. Ultimately, yeah, the
Hmm.
money ran through the economy, and where does it end up? It ends up in the brokerage accounts of people that
Yeah.
own financial assets. Okay.
Hmm.
And so when they have that extra cash, okay, I'm going to buy more stocks, lifts the price of stocks.
Hmm.
Okay. Because the amount of dollars that are available has increased. So the, you know, quantity demanded shifts, right? The
Yeah.
curve has shifted, so the price goes up, right? So
Yeah.
that's where we are today. The curve has shifted higher. So one of the things that the government is saying is, oh, we got to rein in this, there's a massive budget deficit that's been persisting. We got to get that in line. Government spending is out of control, so on and so forth. And they know they can see that a big part of that is because this money has flowed into, has resulted on the balance sheets of the richest. And so they've seen
Hmm.
their wealth being disproportionately, improved because of this. So now you have discussions about things like a wealth tax or raising taxes is something that's actually being discussed, in the
Yeah.
Democratic, Party. And so that's why I'm like, okay, well, that would be a catalyst because if they were to pass something like that, you'd get some selling because some of that, if that's going to be taxed from if my assets are going to be taxed 10%, then off the bat, I got to sell 10% to pay my tax, right?
Yeah.
So there's going to be some selling of the assets. Okay.
Hmm.
Now, depending on the size of the tax, ultimately that'll tell me where the multiple is going to land. Because if I think that we're trading, say, 7 points above where we should be trading,
Hmm.
and I'm saying that the 7 points are because of this excess liquidity, if the government taxes half of the amount that it had injected, that
Hmm.
tells me that the multiple is going to compress down to just 3.5 points above where we currently are.
Hmm.
Does that make sense?
Right. Yeah.
So that's like how I'm approximating. So for me, like that would be a big potential catalyst. Do I think the likelihood is very high? Oh, it's probably 20%, that you get something like that passed. Maybe not in the next 4 years, but maybe in the next election cycle, it definitely could be possible.
Wait, so that is on the macro level, not on the ideo level we're trading. That's the macro trade.
That's a
I
macro
I
trade,
I don't
correct?
want to go like that's the macro trade, but it's like it's a macro idea.
That's a macro idea.
Okay.
That's not even an idea. That's a risk. That's
That's
like
a
a
macro
black
risk.
swan I'm watching.
Okay.
Yeah.
Gotcha.
Yeah.
Gotcha. Um, okay. There are like one or two things I want to discuss with you before we go today. I know you had a long day. Number one, I was just like reading Luminar is a LiDAR company in US. I was just reading, their last earnings call and just and found out something interesting is Tesla bought 2,100 LiDAR from them in the last quarter. Not the current quarter, last quarter. They haven't reported it yet. And what's interesting, that makes Tesla one of the biggest customers. And I ran around, checking channels and realized that Tesla might be using the LiDARs to validate the visual only system. So what they're doing, like on their testing vehicle, they're just gonna install these LiDARs and it's gonna, send out these signals and then compare and contrast the data they got from the visual and then tell the visual, hey, this is what the LiDAR sees. You should adjust your visual system based on these data. So they're training it on LiDAR, but they're gonna take off eventually for a generalized generalized approach to solving the autonomy. So that's something I picked up, which is super interesting. And I know like Google, Waymo, and all the other ones are using the high definition map. That's just, I don't think, even though you have this redundancy, it's not going to work in the long run when something new comes up. Because the buildings might change location. There are like per changes to the road. You have to update those maps every single times rather than a generalized approach. So that's I like a read through that I had on Tesla from Lumina. So that's the first thing I want to discuss with you. Second, I don't know if you follow the ruble market anymore.
I haven't.
So okay, so there's this issue because ruble cannot go directly to dollar anymore, right? So now they are going through China. I think it has been a long time issue. I think ruble with dollar right now is, I think, in the black market it's almost 400. But if you just time the difference, if you do a cross between ruble yuan and then yuan dollar yuan, it's like around 150. So China's accumulating this huge reserve of ruble currency, but then they can't spend it. And Russia, in the other hand, is getting all these yuan, and they are able to convert it to dollar. So my argument here, oh, not my argument, my concern is that going to be a serious risk for China now you're holding all of these ruble?
So what it sounds like is a complicated FX arb.
It is a FX arb.
It's one way to keep the yuan lower.
It's one way to keep the yuan lower. Okay.
Because if they can trade, if they can do yuan,
they're effectively selling yuan through Russia to the global market.
Right. And the global market is taking the yuan, and what are they doing with it? They're converting it into dollars.
They're selling it to by dollar, yeah.
Right. So you get like a transfer and then a sell.
Right. But the thing is, like, what are you gonna do with all the rubles?
I mean, I think for China, because they trade with Russia, that's just going to be how they're going to, like, you see that's their gas budget, I mean, I think ultimately this will put pressure on on Russian assets because you're going to have Chinese purchases of those assets, right? So if Russia issues bonds or treasuries, those will be acquired by ruble holders, right? Yeah, in China.
Yeah. So that's just something I feel. I thought the reason why I think, like, I know China has been really big on accumulating foreign reserves, like especially the dollar, but now you acquire something that's you can only really trade with Russia and not like a global kind of reserve. I'm like, how far can you once they want to defend the yuan, how far can you still defend the yuan if Like for example, like because they're still cutting rates, and everyone in China social media is praising, Powell saying, "Oh, please cut. If you cut, it's going to make our life so much easier with a weaker dollar." Um, so I think they still want some um, a weak dollar, um, but how can they defend Chinese yuan from going stronger? Because that won't help your export.
Right. And that's where having this ruble for yuan, yuan for euro, euro or yuan for dollar, trade can work. Or whenever
But but,
they're
but you got to reverse that to defend the yuan, right?
no, if the yuan is being sold for dollars,
Oh,
then
so
you're
you
gonna get
wanted
a
to.
weaker yuan.
You got weaker yuan. But okay, but the world is already flooded with cheap Chinese product, and
No, now
everyone's
the
trying
world's
to
gonna
put a
get flooded
tariff on
by
it.
now the world's gonna get flooded by cheap EV products, right?
GPV product, yeah.
Right.
I mean, like, it's across the board. Like all of these products, like Yellen actually said, why are you trying to do this overcapacity? Sorry, you're trying to overstretch your capacity and then keep selling using the old method. But seriously, you need to pump up your consumption. Like they don't understand what China's doing on an economical level, and so that's really got me again worrying. Like I know people have been burning options premium on China trade since 2022.
Uh-huh.
So I feel like it's still gonna go on for a little while. I know we talked about this, right? If uh, you know, American people still want to do business with China, it's um, especially if we have like on the West Coast, it's more liberal side that we want to do business, we want to make money, and so on. But if the economy is solely depending on the overcapacity, then like I don't see the other side of the trade. Like how can you get more like capital return from China?
Yeah, and I think that's been the problem for China, which is that they equity markets like that's where equity when countries are still like developing, their equity markets don't necessarily outperform, right? So
Right.
you get it's only when countries kind of figure out the phase that they're in that their equity market can that they can actually like start to have I don't want to say like legit companies, but like that's when you have like an actual legit capital markets. I think that right
Mm-hmm.
now the Chinese capital markets is more a way for the Chinese government to share risk with the private sector
Mm-hmm.
versus it
Yeah.
being a source of like wealth creation necessarily. I mean, obviously, I'm sure some people, put away their retirement and have a lot of money by the time that they retire because of the Chinese market. But I'm just saying, like right now, the phase that it's in right now is still, it's still developing in that sense. Um,
Mm-hmm.
that will change eventually, but ultimately it boils down to the strategy because if they are in a export driven model, the problem with this export driven model is that it's very hard to shift to a consumer driven model, in this. If you look at the United
Mm.
States, one of the really unique things about the US, and I think this is like a really good lesson for China to learn, is that the United States actually became the largest economy in the world before it even had a real navy.
Mm.
It was the largest economy in the 1890s.
Mm-hmm.
It barely had a navy, and just
Right.
80 years before it lost a war with the British. Just 30
Mm-hmm.
years before it had a civil war.
Mm-hmm.
And then already by 30 years later, it then became the world's largest
Thank you
economy.
for reviewing for my civic test.
There you go. Right? Yeah, exactly.
Thank you. Yeah. Perfect. Uh-huh.
And it was able to grow because of the growth of regions in the United States were spurring trade and flow of immigration. Okay.
Mm.
The end of the
Yeah.
day, population growth labor growth rates are that bread and butter. And if you have productivity and you add a little bit of capital, you get magic. You get the magic.
Right.
And that's ultimately the thing that China, I think. So if you look at the China model, I think that's what they try to do. They were like, okay, we're going to export, and then we're going to spark fusion by building these big cities. And when we build
Right.
these big cities, that's going to spur fusion, right? You're going to start to get that trade between the
Right.
cities, and that's what's going to drive things. And that was probably a decent strategy to kind of get started. I think the problem, though, is that there needed to have been like a taper off from the export strategy
Mm.
into a growing consumer market. And that's not what happened in like the last 15 years or so. You ended up with really a continuation of this of this export driven growth.
And I
And I
think
think
most of the wealth there has been tied into the property market.
right,
That also suppressed the consumption.
exactly, right, because that meant that consumers weren't actually like spending. Actually, let me ask this question: how
Uh,
popular are mortgages in China?
Huge. You can't
So
really afford something.
people use mortgages to buy.
You have to.
Okay.
You have to.
Okay.
So like um my example to explain to people in the Bay Area is imagine like a 3 bedroom condo in downtown, like it's like 10 million.
Wow.
So like making the money you're making now, 10 million for three bedroom condo. And then you'll be like, okay, like there's no way I can afford this. Obviously I can pull up like 2 or 3 million, but the rest I need to finance.
So
And
okay, because I didn't have a follow-up question. Okay, so that's
uh-huh.
so then actually what you're telling me is that the property like bubble in China really has more to do with they didn't increase capacity or they didn't increase supply in the places that mattered.
Mm, yeah, exactly. So
Okay.
so the thing is they know, this is money making for the local government. So they built enough housing for 3.8 billion people. That was the stats in 2014. So they overbuilt in tier 3 or tier 4 cities. But in tier 1 like Shanghai, you still have a limit. I mean,
They
there's
underbuilt.
nowhere.
Yeah.
They underbuilt in these. I mean, there's actually nowhere for you to go. Like the traffic is already bad enough. It's like New York.
Right.
Like for all these big metropolitan, but they didn't build out the countryside, and that's really the issue, and hence the big bubble in the not really bubble, big issue with the local government, you know um, uh, financing vehicle, because those are the ones that financed all these projects outside in the countryside, but no one's living there.
Right.
And
Okay.
with the aging population, all of the kids are going to the tier 1 cities. And
Right.
when all these grandmas and grandpas stay in the countryside, and when they die off, then it becomes a ghost town.
Right.
So it's a population issue plus putting too many money in the housing market that soaked up. It's like the crowding out effect. It soaked up
Right.
all of the liquidity,
Uh-huh.
and you'd be like, hey, I need to make this mortgage payment, so I can't go out and eat. Like it's kind of like that. But when the
Right.
when the price is going up, it's like everyone bought housing on 4 times leverage.
Right.
Right? When the price is going up, you don't care. You spend more, you buy cars because you know it's on 4 times leverage. But
Right.
once it go down, it also go down to 4 times leverage. And people are actually like they are willing to default on their house
Why is that?
voluntarily,
Huh.
because the price has dipped lower than
Got it.
the purchase
So
price.
so that means that China right now is going through like what the US went through in
With the OA.
2007. Yeah, yeah.
Yeah, yeah,
Okay. So that's going to take a long time. Like
it's
that
gonna take a long time.
the US went from like a 2% plus growth rate before GFC to a 1% growth rate in the decade after.
Hmm.
So
Yeah.
okay.
So I'm not surprised the GDP is coming down, and then if they still focus on this overcapacity and trying to sell it to the world, then you destroy ASP. Like the problem with all of the Chinese companies competing with each other locally is you destroy ASP. No one at the end of the day can make any money anymore.
No
Like
one can
yeah,
make money in the Chinese market, which is why they have to export that.
they
So they
have to
get in this
export.
virtuous cycle of they want to make money, they have to sell outside, which then drives exports higher.
Right. But like there's like a limit to how much you can sell to abroad. So it's not like everyone can like the global economy just gonna soak up everything China buys.
Right, right,
Everywhere else have their own manufacturing
right.
factories, and countries want to protect that. So you will have a much bigger resistance
But well,
to that.
I'm just saying that like so like the market signal though for like a Chinese company is actually if I
Hmm.
want to make money, I need to sell outside of the
Right.
country because if I
Yeah,
sell inside, it's too competitive, which is
it's too
very
competitive.
interesting, right?
Hmm.
Which is that's very interesting.
I mean,
Um,
Leap Motor actually is sending the first batch of cars to Europe. Like I wrote in the note today. So they
uh,
had a collaboration with Stellantis. So
right,
like the tariffs won't even hurt these people unless you take away all of the margins, because that's
right,
exactly what they have, even sometimes negative margins in China.
right.
So yeah, so the tariffs have to be really, really big for them to make,
Uh-huh.
for them to steer away from the US and the Europe market. So the 100% increase in the tariff, I'm like, it's not gonna hit that big for the Chinese the car manufacturers, um, because they, when they are selling here, they're already selling at that much higher price, at the normal price.
So what this reminds me of is in 2010, when the US
Mm,
economy was still very weak coming out of the financial crisis, the
mm.
government went into what's called sequester because the Republicans wouldn't pass the budget when Obama was president.
Wait, what was it about? I don't actually know about this.
So the sequester was when the government can't pass a budget, it goes into
Mm-hmm.
like pause mode. So it stops make
Mm-hmm.
payments, it stops doing a bunch. It doesn't go into default because that's on the bond side, but on
Yeah.
the for the government services, it just stops making payments. So they had to
Mm-hmm.
like government workers were like they couldn't go to work in the week, they wouldn't get paid. So they was just like, oh, stay home, for the next 2 weeks.
Mm-hmm.
And that actually drove like a big contraction in spending because of that. And the lesson that the U.S. like the in hindsight is a lesson in hindsight, which is that the United States should have done way more stimulus during the crisis for a period of
Mm.
time to get growth back up, and they did way too little. And then right after they did it, they then tightened their belts by doing the sequester. So I think that's something that like in China, I think like the big thing is that I think everyone is waiting for like when are they going to bring out the bazookas because the there's different like analogs for growth. You have like what happened to Japan,
Mm-hmm.
20-year deflation, right?
Yeah.
But another bad outcome was the United States in the 1930s, a 10-year depression, right?
Mm-hmm. Mm-hmm. Mm-hmm.
So, you don't want to outcome like that. And the 2010s, that was a little bit better. We still had growth, but it was just anemic, right?
Mm-hmm.
So I think it's going to be interesting. I think the big lesson from the COVID is that going big helps. That's what keeps the economy on track.
Yeah.
But on the flip side, when you go big, then you also have to go big in the other way to remove the liquidity once the economy is stable.
I
So
think with the COVID, I think it's the supply chain that messed everything up, because that's
yeah,
not something that happened in 2008.
right,
Because only with the pandemic you will have a supply shock to the entire chain, right? You can't even ship stuff anymore. Um,
right.
so I think we're seeing a repercussion of that, like selling the inventory side. That's the repercussion, and um, but there's not really any lessons to be learned, right? Because with the supply, like how do you solve a supply other than
That
having a
that's just going to
vaccine
be a that
faster,
yeah that's going to be a risk that the government has to be attuned to. And so that's where
right?
like what in hindsight what the Fed should have done is okay, there was massive liquidity injection into the market, then they should have begun to raise interest rates, sooner, right? If they started to raise interest rates in 2021, then by the time we had this, I mean, at the end of the day, the supply chains would have caused massive harm, right?
Yeah.
But the Fed would have been better positioned for that. I mean, ultimately, when I think about the inflation thing, I think it's more of a political issue than a real economic issue.
Yeah.
But nonetheless, like you still have to kind of acknowledge where things are.
Yeah.
So okay, it is what it is, but it definitely, like, the economy is doing much better than if we didn't do it, right? So I think that's this a risk that government should lean on. Like, it's better to have a little bit more inflation than to have a little bit less inflation, for an economy. So I don't know. That's kind of my take. But I actually have to run now because I'm
Okay.
gotta get some dinner. But
Cool.
great catching up today. Obviously, lots of things that happened.
Yeah.
And lots of earnings too. Oh my God, crazy earnings
Yes.
week.
Yeah, I'm gonna tune my Tesla model and hopefully it balance out. If it doesn't, then let's do a special session
We'll do a deep dive,
on
yeah.
Friday, or do a deep dive. But meanwhile, yeah, I'll try to get the Rivian and Lucid earnings preview to you around the weekend, so we get prepared for the trade.
Cool.
Yeah.
I'm excited.
Okay.
All right,
See ya.
Yeah, catch you guys later. Bye.
Yeah.